Hey, everybody. Before we even get started, I want to start with a scene, paint a picture for you. So, if you will, picture a due diligence trip. An LP walks into the halls of a mid-market real estate manager, and at some point during the day, the senior partners step out of the room, and the LP starts asking the 28-year-old analyst a very simple question. Do you feel like the people here actually listen to you? That's not a courtesy question, that's underwriting. And today we're going to pull back the curtain on exactly what that's all about. So, welcome back to the NextGen podcast. I'm Geoff Dohrmann, and today's conversation is one I've been wanting to have for a while because it sits at the intersection of two things that almost never gets talked about in the same breath: leadership and capital allocation. And we've got two people with me today who see this from completely different angles. First, Stacy Schiffman, Global Head of Executive Search and Talent Advisory at Alliance Search Partners, which is part of Alliance Global Advisors. She spends her days inside the leadership structure of these firms, placing the people who run them and raise capital for them. And then Bob Sessa, who most of you know, he's sat on the other side of thousands of manager selection decisions as the former head of real assets with Texas Employees Retirement System. He's the guy who's been in the room deciding whether a firm's leadership is actually investable or just looks good on a pitch desk. And today we're covering a few things that exemplify how LPs actually judge leadership quality, why succession planning is a bigger deal than most GPs think, and maybe the most underrated topic in the industry, what boards are really all about. Stacy, I know you've got a hot take waiting, so go.
Thanks, Jeff. Okay, my hot take is right here that most GPs think leadership evaluation happens in their pitch meetings, and it doesn't. It happens in the hallways, it happens in the bathrooms, it happens when no one senior is in the room, and that's the real diligence.
Yeah, that's it's an extremely important part of diligence. Is I've told my staff numerous times we are buying a process, and part of that process is how decisions are made, which starts with the tone at the top. What sort of environment does leadership create that hopefully allows for best decisions to be made? Anyone can coach a founder to give a great answer about their leadership philosophy. You cannot coach an entire junior staff, though, to convincingly back that up for 6 hours straight or in various interactions with them. And that's really the test of leadership.
So, Bob, walk us through what that actually looks like, because I think people assume diligence means spreadsheets and track records and going over documentation.
It definitely includes all of that, but it also starts with something a little bit more simpler. We ask to meet with junior and mid-level staff without senior leadership in the room, not in an adversarial way, just a normal working session. And what we're really looking for is whether people's voices are actually heard day to day and whether they feel like they have the resources to do their jobs, why they chose that firm. We just like to try to get as candid answers without kind of the bosses in the room. And hopefully you can get some good unvarnished answers.
Yeah, that's a thing that candidates will often tell me as well when they're meeting with GPs, and they can feel whether or not like the questions that they're asking have sort of real answers or a box checking exercises, and certainly what we hear often from the LP community as well. So, Bob, are you saying that it's a little bit more about like pattern matching as you're getting to know a team? Would love to hear a little bit more about like the timeline as you think through that and how you've gone about sort of connecting the dots when you're really getting to know a manager and underwrite the entire organization.
Yeah, I mean, it's always about the trends and how consistent is the various uh, factors that we're monitoring and reviewing. And so the tell isn't always in what people say. It's in the body language. In a group meeting, does a junior person make eye contact with their boss before they answer a question? Do they visibly check whether it's safe, quote unquote, to speak? that hesitation, that's the signal of a top-down culture, which is okay, but it sounds like are they really sharing information and feel comfortable discussing issues? And that's what we're trying to get at, is to make sure that there's a good culture that allows for people to question decisions, to share their viewpoint. That's really the big thing. It doesn't matter who's making the decision. What's important is that all the information can get out there, vetted, and fully discussed in a healthy discussion with good back and forth, where people feel comfortable doing that.
Well,
Right.
that sounds almost anthropological.
It is. And I'd push on that a little bit, Bob. Like when you see hesitation, is that automatically a red flag? Or, how are you thinking about that? And, I guess there's a version of a hierarchy that's healthy. Not every firm needs to be flat. So how do you sort of think about that as you're looking at an organization? Are you thinking about the size, the team structure, what exactly you're picking up on? I guess how do you kind of bring that into more of like an analysis as you're connecting dots?
Yeah, we're not worried about if is it flat or top-down structure per se. What we're really looking for is whether people feel comfortable to disagree. Can they share their viewpoints?
Right.
Not whether there's a hierarchy at all. Those are different things. We want robust discussion around decision making to ensure all issues are properly vetted.
Bob, this is really an important time for the investment managers trying to raise capital. And you got to believe that they really rehearse very thoroughly what they're going to be doing and how they're going to be doing it. So how do you get past the rehearsed answers? Because a founder can train their team for a diligence visit the same way you train for anything, really.
No, I mean that's a good point, and that's another thing I tell my staff. We've got to poke through the marketing and poke through the kind of the pageantry and the presentation. And so, we're trying to triangulate and touch on as many points as we can to again go back to, is there a pattern? Is there some sort of consistency that we're seeing? And so we'll call people who've left the firm to get their viewpoints. Former staff, even with an NDA in place, limiting what they can say directly, you can learn an enormous amount from what they don't say, how long they pause, you know, what they're avoiding. Reading between the lines is its own skill. And so that, there's many ways of getting at that answer.
Yeah. And I imagine at times when you're sort of deep into due diligence, meeting with teams and firms, investment managers will tend to start thinking that an allocation is looking more imminent when you might, in fact, be picking up on some issues that you're uncomfortable in their leadership structure or how the firm is managed. I guess to go a little off-road here, how many managers do you think are out there not necessarily understanding that their leadership structure is affecting their capital raising?
I really have no idea. That's a really good question. But I will say is that, some firms will hire a consultant to look at their practices, their perceptions in the marketplace, et cetera. And part of that review usually includes a survey of stakeholders, which would include existing and potential investors, LPs, which should provide good feedback for them, and especially on the leadership and how people view the firm. And so that's something and something else I've always advocated for is 360-degree reviews. If it is done correctly, i.e., with true anonymity, it is really a great it's really a great source of constructive feedback that you normally don't get. And it's tough because you really do have to do it where people feel comfortable that if they say something, it's not going to come back to bite them in the future because they're just trying to provide constructive feedback. And so it does go back to, I really have no idea how
Yeah,
they know whether they have good leadership or not.
right.
So if I understand what you're trying to communicate here, Bob, it sounds like the overheard hallway conversations, the eye contact during the meeting, the ex-employee calls that you make. No one of these things is a smoking gun on its own. It all kind of fits together as pieces of a puzzle. Is that what you're saying?
Correct. Yeah, I want to, to clarify that first of all, there is no clean stories. I mean, I've underwritten many managers, and there is no clean story. As much as I wish it was, I wish we could go to IC with, there is nothing wrong with this. But and so no one issue it should be a deal killer. There's certain things, but this is a mosaic, and you're really trying to piece together all of this to make sure you're finding that consistent pattern that justifies your hypothesis and your views. So one slightly awkward answer from an analyst means nothing, but when you're starting to see the same pattern across, a dinner or a meal or a reference call, it's, on the site visit, talking to people, that's when you see the patterns adding up that becomes, okay, this is the data point about their leadership quality.
Right. And if you were to be advising managers about their own sort of bench strength when they're in front of LPs, how would you think about where's the sort of North Star for them? Is it in the way that they're managing their teams, the way that they're presenting themselves? Is it about something bigger in behind the scenes in the firm? How are you thinking about that leadership style and being in the room with them and giving them any advice?
Well, it's more, we're just looking to make sure that, again, kind of, it sounds so simple, but it's really kind of, I think, kind of hard to create, is just people feel comfortable sharing their views, being able to question management, being able to question the decision makers, because as the decision maker, and we all have our own, situations where we are the decision maker. You want to make sure you have all the information, all the different potential risks, et cetera, to truly come up with the best solution to whatever it is you're trying to decide on. So that's and obviously the bench makes sense and whatnot. So
Right.
Let's shift for a second to something that probably terrifies founders and senior leadership more than anything else, which is the discussion about succession.
Yeah. Just saying what folks don't really like to say out loud. Every single firm needs a succession plan. Every firm, it doesn't really matter if it's 2 people or 200 people. Even if the plan is literally, if I die, the firm disbands and returns capital. I mean, that's a plan, and LPs would rather hear that than nothing.
exactly. I mean, succession planning is always at the important to our underwriting as well. And it doesn't matter if somebody is 30 years old or 70 years old, 50 years old. We just want to know what happens if the proverbial bus, somebody gets incapacitated, because we need to understand how our capital is being protected over the long term. And so, we're not expecting, you don't have to have the perfect thing, but just making sure you're addressing it and dealing with it, and there is some plan in place.
What does the diligence around this issue of succession really, what is it all about? Because, how do you probe on it? Because I think when you talk about succession plan, it sounds like what you're talking about is some kind of HR document, but I suspect there's more to it than just that.
No, yeah, I mean, that's a good point. It's, we're trying to figure out the ownership continuity specifically. Is there a key man insurance in place? What happens if the principal dies, or what happens to their voting shares? Does a spouse or an estate actually inherit the voting rights of the management company, or just their financial interest? So what we're trying to do is we're trying to avoid a messy, unforeseen situation where all of a sudden the organization stops because of an unfortunate circumstance, because we need to ensure our capital is properly looked after, because these are, we're putting in long-term commitments. We're not buying publicly traded stocks where something happens to the CEO and there's sort of uncertainty you can sell it. We're locked in for 7 to 10 years or longer.
Right. And also probably could be a deeper, longer conversation around what does succession planning really look like, not just in the absence of a person or a team, but when they're actually still part of the team and running the team, and what does that growth look like internally? How are they allocating, ownership or capital in the organization? How are they aligning with senior leadership or partners of the firm to create a succession plan that would work in the absence of the founder or the founding partners. So all really interesting stuff that probably we can deep dive on at another time.
Yeah, and how much does firm size change how hard you push on this thought?
Yeah, it is pretty meaningful and significant. A larger firm, you're going to have a deeper bench. They're going to have a little bit more sophisticated organization behind them, more partners, more redundancy. There's less single point of failure risk. Where we really focus and lean in on is the smaller niche managers, since we are again locking up our capital for potentially 7 to 10 years or longer. And so again, it's that unproverbial situation. And so it's these smaller firms where there's potentially more risk of who steps into that role if something unfortunate happens. Does the entire strategy live in one person's head, or even worse, driven by a founder's intuition? That's the real risk we have to underwrite, not just take note of it and move on.
Right. That sort of solo genius positioning that we'll see across a lot of emerging managers, that can work for you, and creating alpha can also work against you in a race when LPs are not just betting on your strategy, they're betting on your, proof of concept, whether or not you can scale the firm, and frankly, whether or not the organization can survive you.
Yeah, and I think that's a great line. Betting on the org surviving you. I think that's a clip. Okay, let's go inside the room most GPs never let anyone see. The investment committee vote itself.
Yeah, this is another area that's really important. It doesn't seem to get a lot of attention, but it can tell you more about a firm's actual leadership culture and the decision-making process generally. We ask very specifically how votes are cast. Is it majority rule? Does it need to be unanimous? Who's on the committee, obviously? And this is the one that can trip people up. Is there a de facto veto, where technically it's a vote, but everyone knows one person's no ends the conversation?
Yeah, I think that last one is so common and probably rarely disclosed, honestly, up front. It's usually one that you can go kind of deep into understanding how a firm actually operates, and then the real picture can show up about that potential de facto vote.
But how do you even get a straight answer on that from a firm that's trying to sell you on being sophisticated and institutional?
Yeah, sequencing is a big tell. We ask, you know, who speaks last in the room. If the most senior person gives their first view, everyone else is just going to agree with the boss for the rest of the meeting. Is there a lot of sort of self-deference to them? It really kills robust discussion and vetting if the junior and the lower level people aren't able to share their views and in the weeds analysis that they've been doing. The firms we've had the most confidence in are the ones where the senior person deliberately speaks last, specifically to avoid tainting the team's voices in discussions.
Yeah. If I were to push on that, is that something that firms can actually sort of retrofit? Like if a founder hears this and realizes, oh, I've been talking first in every IC meeting for a decade. Is that a fixable habit or generally something that's more baked into the culture?
Probably both. I mean, I think it's fixable, but only if the founder actually believes it matters and can change. The old adage, you can't teach an old dog new tricks, has meaning for a reason. So only time will tell if they change, and the people within the organizations are really going to be the best ones to judge if the process has really changed. So,
Right.
So if somebody's listening to this, what's to stop them from now telling you that they always go last? But in reality, that's not what really happens in investment committee. How do you check that out?
well, that goes back to we're trying to triangulate and really get at how decisions are made. And that's why we like to talk to the junior and mid-level people without the bosses in tow. Former employees could also be potential um, uh, intelligence on that factor, but it is difficult. I mean, even if you're I mean, you really don't know the cultural firm even after you've worked there for a year. It takes years to truly understand that culture. So it is difficult to truly get at. But I will say, I think the track record and the success of the firm is probably will eventually catch up to it. So you can only do that for so long, but it will catch up to you because you're going to miss something if you're doing a top down, this is my way, and not really getting at all the other information. So but dissent is what protects the LP capital. So when a deal looks great on paper, something feels off. We want a robust discussion vetting to ensure that that downside risks have been fully captured. So again, I think it catches up to them, even though they can tell us all they want. Eventually, it'll be in the track record.
So again,
Right.
it's a mosaic, and what you're saying is the investment committee process really is just a proxy for something a lot bigger.
Correct. Yeah.
Right. And loops us back to that eye contact and hallway discussions. And now when I see LPs out at events, I'll be thinking solely about them there to analyze folks that they've been speaking to and prospecting, to really get to know them and their teams better. So this is really eye-opening.
So let's close on boards because I think it's genuinely the least understood piece of the whole conversation, the role that the board plays in this whole process versus the staff.
It really is. And from where I sit, most GPs treat a board as a credibility line item, if you would, on the pitch deck rather than an actual working body. And, that could be a disconnect worth digging into here.
Yeah, anecdotally, and I do want to stress that it's anecdotal. We haven't done true data crunching on this, but I do think that there is a correlation with firms with real advisory boards tend to show better organizational outcomes and success through time. So when a manager has outside IC members, which is uncommon but not as rare as you might think, it brings a generally objective perspective into decisions that would otherwise be made by people who might be too close to the deal, living and breathing it every day. It's analogous to someone proofreading your research paper back in college, just another set of fresh eyes. You've been in and day out, and it's so easy to miss something. So it's good to have that third party outside observer to help kind of see things you might be missing.
Did you or do LPs typically interact with these boards during diligence, or is it more of kind of a background credential you look at and evaluate? Do they have one or don't they? And do they
Yeah,
use it or don't they?
yeah, it's mostly the latter. We really do not sit with any manager's advisory board. I mean, that's really for the manager, but it will show up in the DDQ, that they have one, and we do will use them as a reference. Call up the board member and ask them various questions, a lot of compare and contrast because they might sit on others. But direct engagement is rare.
Why? Why wouldn't you want to be talking to the advisory board if they're playing a role that's going to influence your investment?
Well, that's a good question. I think it's really the structure of it and the logistics. These are really, part-time jobs for most people. They're not in there all the time, and their function is really to management, not to investors. So they're really not being put in the room. So, but again, we have called them for reference checks and things like that. And I'm sure if we needed to, we could probably call them more often if we were really concerned. But
Are you saying though that when you know that there's sort of diversity of thought across the board that's contributing to potentially larger decisions at the organization, is that idea of having that diversity of thought one that's comforting to an LP making a decision or not? Or how do you think that that's viewed?
no, I mean, exactly. I mean, that's what we want, again, is that diversity of thought across situations and market cycles. Usually advisory boards, they might have, let's say if it's a 3 or 4 person advisory board, each person might have certain expertise. One could be really good with debt or workouts or something. So it just adds to the expertise of the founder and the staff when you're adding in all these people that have it gone through experiences that they may not have, and so it just helps them to make sure you're seeing things and that you may not have thought of because you didn't live through it. So these people have paid the tuition for you in a sense of going through those mistakes and living through them to say, oh, you should be looking out for that or this. So yeah, because board members, if they've lived through different cycles, they can see around corners the founder may not have seen.
Right. They save their bell bottoms.
Well, I think that's a great place to land this discussion. Bob, Stacy, thank you both. If there's one thing I'm taking away from this conversation, it's that LPs aren't evaluating leadership as a personality trait, and that the due diligence process is more than just checking off boxes. LPs are evaluating investment managers and investment programs as a whole system. And they're trying to answer a couple of key questions. And probably the most important is, can this organization make good decisions, disagree productively, and survive its own founder?
Yeah, and thank you again for having me. I enjoy the discussion. And if you're a GP listening to this and didn't really focus on this, I hope it creates some introspection on how to improve the culture and decision-making process. I'm sure you want all the information to make better informed decisions, and that starts with a culture that allows healthy disagreement and discussion.
Right. Echoed.
Okay.
Thank you.
Go ahead, Stace.
I said I was echoing Bob, and thank you so much. This was a great discussion.
Yeah, it was terrific. Thank you, guys. And thanks, everybody, for listening. We'll see you next time.
Thanks.
Thank you.